New home sales plunge over 11%, inventories at 16-year highs. We're going to tell you what all this means. New home sales plunged to the lowest level since November of last year. This is on Market Watch. Sales of newly built homes fell 11.3% to an annual rate of 619,000 homes. That's from a revised 698,000. This all said by the Commerce Department on Wednesday. Now, new one family homes sold. This is to show you how significant this number is. It's in thousands. 619,000 is the lowest level we've seen going back to last year. Certainly, the volume of the homes being sold is plummeting. Now, new one family homes sold. This is on a year over year basis, just simply to demonstrate how bad the number was today. It's down 16.5% compared to this time last year. The volume of sales is declining. We've established that, but prices remain strong. New homes sold, this is the average sales price. Now, again, these are new homes that were just built. Average price right now, $520,000. Now, this comes in very much in line with what we've seen over the past 6 months or so. The prior month, 503, before that, 526. So the average sales price is not changing. It's only the volume of the sales, the number of homes that are actually being sold. Well, as the volume of sales declines, inventories rise. Inventories are expressed in the number of months. This is the monthly supply, which currently stands at 9.3 months. What this means is that it would take 9.3 months to sell all the new homes in inventory at the current pace. For a little bit of reference, 9 is a very high number. A very low number would be 2 or 3, with an average around 7 or so. So 9 is quite high. It's a lot of inventory. As sales plummet, inventories skyrocket. Putting the two together in blue, new one family homes sold. Again, that's 619. The monthly supply is at 9.3. So we can see as the sales are declining, inventories are skyrocketing. As the sales plummet, the prices haven't yet begun to fall. We say yet, and we're going to show you why in just a moment, why that could be the next step. In blue, new one family homes sold. In red, new homes sold. That's the average sales price. And again, the average sales price right now at $520,000 is right in line with where we've been for quite a while now, whereas the volume is declining. But this has happened before. What happened last time? What happened after that? In red, new homes sold. That's the average sales price. In yellow, new one family homes sold. So the yellow line is the volume, the number of homes that are actually sold. Again, the red shows us the average sales price. This is in 2007. Notice in particular, the average sales price actually rose as new one family homes sold, the volume declined. Kind of sounds like what's happening right now. And notice what happened right afterwards. All of a sudden, both lines plummeted, meaning historically, now, this is not an exact science, but historically, what we've seen in the past is that when the volume dries up, the prices remain strong, but eventually follow lower. And think about it just, as if we were running our own store, for example. There aren't a lot of shoppers out there, so the volume of the products that we're selling off the shelves is declining. We're not selling as much. So what does a store owner do? They lower prices. What is a homeowner going to be forced to do? Lower prices. There just aren't the volume of buyers out there. Now, there's more evidence, by the way, of this in other economic numbers, of which we've discussed very recently, actually. In blue, this is retail sales of building materials. This is, reflects stores like Lowe's and Home Depot, home improvement stores. That's the retail sales that we've seen over the past couple of years. Again, in blue. In red, the Case-Shiller Home Price Index. And notice the disparity, the divergence, what we've seen recently. Case-Shiller Home Price Index is rising as the sales of building materials are falling. That doesn't make sense. These should be complementary numbers. They should go in the same direction. They were going in the same direction a year ago. Now they're moving in opposite direction. What's the answer? Inflation. Inflation is propping up asset prices like homes and real estate, while at the same time, inflation is hurting the consumer's bottom line. It's hurting our buying power, and that's why the retail sales is going down. Here's another example we spoke about recently. In red, Case-Shiller Home Price Index. In blue, existing home sales. Now, existing home sales, that's the volume of existing homes. Today, we're talking about new homes. These are existing homes. The volume for the existing homes is also declining. So it really is not dependent on whether a house is new or used. There just aren't buyers out there. But meanwhile, the Case-Shiller Home Price Index is going up. So prices are rising, but they're not rising as a result of more buyers and sellers. They're actually rising despite there's not a lot of buyers out there because of the inflation. Now, we spoke about a number of these issues and we put together a pretty interesting read in our Substack newsletter. We'll put a link, it's absolutely free. We'll put a link in the comments of this video. It's called The Many Dark Sides of Inflation, where we take a look at a number of different, seemingly unrelated economic numbers, and we see how the inflation is really casting a spell on different slices of this economy.